The effect of the interest rate hike is rippling through many, many markets. This chart shows the green line, which is the 10-year Treasury note, and then the orange line is the price of gold. You can see over on the right-hand side, you can see, first of all, they're inversely related. And because interest rates are going up, that's put pressure on the gold market. Hey, Courtney Smith here. Welcome to Wall Street Winners. A couple of upcoming events next week, May 12th and 13th, our Option Success School in our Las Vegas classroom. May 19th to 20th, two-day income, or we have a new name for it, stock market cash flow. And then coming up in Dubai in October will be advanced futures and Forex trading. Now, we're going to have a bunch of more courses coming up, but I'll let you know next week. All right, everybody, since 1995, my head is spinning. I've been doing this newsletter. All right, let's get right into it. S&P 500. We've got a big triangle formation here. We keep winding up, and it's really boring. But typically when we see a big triangle formation, guess what? It has to break out one of these days. Now, when I look at this, I have conflicting ideas. It has a kind of flat bottom and a slanted top. That usually means it breaks to the downside. But on the other hand, the purple predictor is wildly bullish, incredibly bullish. It's making higher highs. It's in a bull market. Even though in the last couple of weeks the S&P has gone down, the purple predictor has gone up, which means that the smart money is stepping in and taking advantage of this dip to buy, and that suggests that we're going to see a breakout to the upside. Well, whatever it will be, it will be. Now, let's take a look at our industrials. A few things here to look at. Upper right-hand corner, our normal thing. The red line, which is DI minus, is still showing more selling pressure than buying pressure in this market. And that's significant. We have to respect it. Now, it's only for the Dow, not the broad market, but nonetheless, it shows up in the other markets, in the other broad indices as well, that really this market still is on the defensive in spite of the smart money buying. Now, a couple of other things. I don't really pay a lot of attention to moving averages, but the market does. The top downward yellow shows the market got up to the 50-day moving average and then collapsed. But the lower yellow one showed that it got down to the 200-day moving average and started to rally. The market considers the 200 to be more significant than the 50. So that would suggest, particularly with the price action we had on Thursday and Friday, that this market's going to move higher. NASDAQ exploded on Friday. Really, we shouldn't call it the NASDAQ. It is the Apple index. And the purple predictor also remains bullish. So NASDAQ also, you got to look at this and think it's more headed to the upside than the downside. Seasonality is on a bull signal, and Friday's price action certainly confirmed that. Looks to me like we're going to move higher. Purple predictor is certainly suggesting that. Our seasonality, though, longer term, we should expect this market to really drift lower into September or October. So that would be another 3 months of boring price action. I certainly hope not, because I'm falling asleep. Yield curve is still kind of capping gains, making it hard for the market to move higher. But if you look closely, you'll see that really, once we get into September, it's really in a sideways trend all the way for the next year. So it's going to become really a neutral in the market. Asset allocation slipped a little bit this week, suggesting that money went a little bit out of the stock market and into the bond market. But as we noted before, smart money is coming into the stock market. Then retail money, that's us, and dumb money is going into the bond market. Stock market risk indicator. Now, this one was a big change. We had the huge leap up a couple of weeks ago, and then this week we skyrocketed again. Well, what does it mean? It means that the market wants risky stocks. Now, this is really very interesting because they don't want dull, boring stocks where they can hide out for a while. they're really getting aggressive. The market's actually saying, give us risky assets, give us risky stocks. We don't want consumer staples or utilities. We want things that are more exciting. And that's actually a bullish thing for the stock market. Global shares, another boring market. Who cares? Now, the bonds, as I started out, this is really very fascinating. I'm really building a case that we're about to embark on a major bear market. But we're not there yet. Look at the purple predictor. The purple predictor had been basically neutral from really January until just a few weeks ago when it kind of turned bullish. In other words, what's happening is that the dip in bonds, which means a rise in interest rate, is causing people to take advantage of those higher yields and buy bonds. So this bear market that I'm starting to build a case for looks like it could be a very sluggish, boring bear market. But if let's take a look at our short-term factors. We see the green line, that's the bond yield up at the top. Gold's coming down. The most important indicator is the blue indicator, which are 10-year treasuries in Germany, and it's suggesting lower interest rates. Gold is suggesting lower interest rates, but the CRB, the chart, is looking for higher interest rates. So kind of a mixed bag. Generally, it's going to stop. It tells me that the interest rate movement, this movement right here, is, and remember, this chart is the flip of the other chart, that really we're not going to see interest rates go much lower. In other words, the bond market won't go much higher. So we might get back into the gap that we left 3 weeks ago. Maybe we'll get up to 120, 150, but that should be the end of any rally in this market. Now, if bond yields are kind of going up, that should mean that the dollar goes up. And this is something we've been really pounding on over the last several weeks, is this big breakout is really important. Now, what you can do when you use technical chart analysis is it can give you projections. It can give you objectives. So one of them is you take the width of the consolidation, the rectangle formation, and you simply project it higher. So we're getting close to that. We got up to 92.75. We should get up to probably 93.25, and that will be the objective of the breakout. That's the first objective. If need be, I'll tell you where the second objective is, but it's much higher. Gold looks pretty much the same, except the gold, if the dollar's breaking out, usually gold should be breaking down, and it's not. It got back to those old lows, and we got a little bit of a bounce. I'm just thinking, though, that if the dollar's strong, if interest rates start to move back up again, then gold will crack down. Let's look at our gold indicators. The top one is clearly bearish. The middle one is slightly bullish. The bottom one has been bearish, but hooked up. So it's kind of an indeterminate, maybe somewhat bearish outlook here for the price of gold. So not really interested in it right now. What about oil? Oil popped on Friday, and as I've been saying for weeks now, I'm really getting much more bullish here. The Saudis came out and basically said, hey, you know what? After all those years of trying to maintain market share by cutting prices, we changed our mind. We want higher prices. Well, the U.S. has become, or is about to become, the world's largest oil exporter. But on the other hand, the Saudis are really, really super important. Obviously, U.S. and Saudi Arabia are the two biggest players in the oil market, and both of them want higher oil prices. So it looks to me like we're going to continue to grind higher, not explode higher, but grind higher. Finally, in Bitcoin, let's get a little bit more serious here. So the downtrend line that I've got on there, the red line, clearly shows this is what we've been focusing on. I told you when it broke that line, we were going to rally. And we've rallied now almost $2,000 per Bitcoin, from about 8,000 up to almost 10 grand. The market should rally higher. And we should get higher for a couple of reasons. Number one, there's just no resistance above the market until we get to that blue number, 11,770, which is also the 55-day high. So right now, all I'm expecting is a rally up into the high 11,000 area. Another key reason why I'm expecting to see a rally here in Bitcoin is the blue line. That's the purple predictor. I'm sorry, I can't get it in purple on this chart service, so it'll have to be the blue predictor for Bitcoin. And look at it, it's skyrocketing. People have come in and taken advantage of the big dip in Bitcoin to go on a buying spree, and so it's skyrocketing higher. But here's the thing, the skyrocketing is about to end. How do I know that? Because of the chart on the bottom, which are the stochastics. We have a stochastic divergence, which will cause this market to stumble and move down lower for less than a week. Okay, just a little dip in this little mini bull that we've got, and then we should see the market then grind back up into the high 11,000 area. Now at that point, we really need to take a look at it to determine what's next for Bitcoin. But right now, we're long, we're strong, we're making money. All right, everybody, that's it. Don't forget our upcoming events. You must attend all of them, really. I mean, you know, if you want to sit with the cool kids, you got to come and say hello to me live. All right, everybody, thanks very much. Fully paid up members, hang on, you know what's coming. Super cool trades that happen to be making money.